Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. First things first, make sure you have your brokerage platform open and ready to go. Make sure you have your YouTube video quality setting as high as possible. It helps you read the numbers a lot easier. Have a calculator ready in case we need to do some easy math. And finally, remember this is just for entertainment purposes only. It's not financial advice. All right, let's go over our open positions. Coca-Cola down big yesterday, so it's moved against us a lot, and this trade's only been open for 2 or 3 days. The good news is, though, we have earnings coming up. That should help us. We have November expiration, so we've got over 40 days to go till that. So we got a lot of time for this to play out. And it's a put spread, so we're only risking $250 here. So don't worry, we can always roll if we need to. Roku, kind of flat. Open it at 62. We're fine on that one. Square, same thing. Open it at 30. Market's 35. Mostly flat on that one. DraftKings, flat. Open it at 51 or 52, flat. And then Macy's moved against us all day yesterday and still today. Just the market in general has moved down. So anything that's a put is kind of been moving against us. This is 14 days till expiration. This is October expiration. So we have to decide kind of by today if we want to close it and take a loss or roll it and give us more time. If we do roll it, we'll get a credit. The only issue is earnings for Macy's are November, I think 14th or 15th. So I'm not sure if I want to hold Macy's through earnings. Let's look at the chart really quick. Our strike is 12, so it's over $1 below it. We'll hold this one for now. We'll have to make a decision by Monday, either to let it expire at whatever loss we get, roll it, or just close it next week. But we've got some time still. All right, let's look at some new stuff. Let's start with ExxonMobil. Down now again. In talks with Pioneer to buy Pioneer. Earnings are October 27th, so we're too close to earnings. Let's look at Pioneer. They're up big today. Their earnings are on the 26th, so that's going to be hard too. Let's just look at the call side. Actually, skip this one. Completely illiquid. Look at these spreads here. There is some volume, but at what price? Let's look at Clorox again. Follow up on that one. Their earnings are November 1st. We got a little bit of time here. And maybe finding a bottom now. Options. If you sold the 110 about the 105, you got these big 20-point spreads though. Surprised there's not more liquidity to them. Skip this one. TLT. We've talked about the TLT a lot. The bonds continue to move downward. Here's the weekly chart. It's possible it may catch a bid somewhere around here. I don't know. This chart's going back to 2002. Its lows are going back to 2007. It's a tough one. You don't get paid for it either. If you look on the put side of the options, you'd have to sell for November expiration, sell the 78. And buy the 73. What do you get? 61 minus 19. 61 minus 19. Divide that by 2 and divide that by 500. Still only a 4.2% return on that. Now the call side, if you want to take the call side, it's even worse. You'd have to sell the 91 and buy the 96. 49 minus 13. Divide that by 2 and divide that by 500. Even worse, 3.6 if you sold the call side. All right, next. Pepsi. Pepsi has earnings coming up on the 10th. So 4 days. We'll check in on Pepsi. It's been down big, just like Coca-Cola. All day yesterday and today again. Down over 2.5%. It's incredible. This is Pepsi and Coca-Cola we're talking about. These usually aren't very volatile stocks. IV rank according to E-Trade is 101. Let's wait till after earnings. Let's look at MGM next. Their earnings are November 1st, so we have about a little over 3 weeks. Up today, but they're already selling off. It's got a little bit of liquidity. Skip the put side. On the call side, if you want to sell something on the call side, sell the 41. And can you buy the 46? No. Buy the 44. Sell 41, buy 44. What does that get? 37 minus 14. Divide that by 2. Divide that by 300. Almost 4%. That's not as good as I thought it would be. We're going to skip MGM. Next is Mondelez. Same story as the rest of them, like Coca-Cola and Pepsi, down big. Earnings are on Halloween. Wow, oh wow. Not enough liquidity to do anything here, but down almost 6% today. Is there any news? Nope. Nothing. Let's look at the utility sector ETF. That's next, the XLU. Still on its journey down. We looked at this one for the past couple days. Nothing to do yet. On the put side, if you want to sell the either the 51 or the 50. Sell the 50 and you'd have to buy the 48. It's too liquid though. You got a 5-cent spread here and then a 7-point spread here. It's not as good as I thought it'd be for an ETF. Call side, sell the 60. And what, buy the 62? This doesn't seem worth it. A lot of options today, just nothing hits all the marks. Kellanova. What about Kellogg? Even worse. Let's go back to Kellanova. Hardly any volume. Nothing. Yeah, it should get a bounce around here. There's been so much selling pressure on all these stocks that it should have a bounce soon. Let's look at Levi. I think this is a post-earnings move. Yeah. Down after earnings, but definitely coming back. Nothing on the, no option volume on either side. We'll skip that one. Let's go back to ExxonMobil really quick. earnings are too close. What a shame. Today would be the day I'd pull the trigger on ExxonMobil, but we got earnings coming up in like a week and a half or so, so I want to skip earnings unless I already have a position open. I'm going to hold it through. Let's look at the XLE in general. Not down as much. On the put side, if you want to sell the 77, buy the 75? No, it's backwards. Sell the 78 and buy the 76? What does that get you? Or sell the 70. Let's do 86 minus 18, divide that by 2, divide that by 800, 4.2% if you want to sell the 78 and buy the 70. That one's not too bad. Where's 78 on the chart? Down here. That one seems fair. You're only getting 4.2% though, but do remember it's an ETF. Target. Is Target down today again? It is. We're looking for it to get to around 100 before we make a move. Getting very close. When are Target's earnings? The 15th. So we got over a month. That's what we're looking for. If you want to go ahead and open something now. I wish there was something in between the 85 and the 90, but sell the 85 by the 80. That's 90 minus 49. Divide that by 2. Divide that by 500. Only 4%. I wish there was something in the middle you get paid a little bit more. On the call side, sell the 120 by the 125. What do you get there? 108 minus 63. Divide that by 2 and divide that by 500. 4.5% on the call side. You don't get paid there either. Not a lot today. Alright, let's go to our IV rank scanner. We'll sort by volume. What the hell? The SPY up first. Got a little premium built into it now. I think 50% retracement from this move up is 415 or so. Or 405, somewhere around here. Unless there's some compelling news. Should get a bounce anywhere between 415 and 390. But if you want to open a new position on the put side, November expiration, sell the 398 and buy the 393. That's 275 minus 220. Divide that by 2, divide that by 500, 5.5% on the put side. On the call side, you got to sell the 447 and buy the 452. 154 minus 87. Divide that by 2 and divide that by 500. Almost 7% if you sold the call side. $447 on the chart is up about here. Still, that seems pretty fair. You're getting paid almost 7% to take the other side of the risk. We've had this pullback. It should get a bounce, but don't know where, don't know when. Same thing with the Qs. Tesla has earnings on the 18th. Apple has earnings on the 2nd. It's a little more than a month away. The IWM, the TLT we've already looked at. AMD. Whole bunch of earnings coming up soon. Halloween. Maybe there's some time here. Looks like it's trying to break out here. Maybe sell something on the call side. If you sold the 125 and bought the 130, 147 minus 95 divided by 2 divided by 500, 5%, that's okay. The put side, if you sold the 85 and bought the 80, 114 minus 66, divide that by 2 and divide that by 500, worse. So sell the call side, the 125. Where's that on the chart? 125's up here. Interesting. Earnings are starting to be priced into this. Let me write this one down really quick. Maybe we'll come back at the end and open something on AMD. Amazon has earnings coming up. Rivian down again today. November earnings. We just got out of a Rivian trade. RIVN. Yeah, we got out of our call spread yesterday. Maybe open something on the put side now. Not a lot of room. Not a lot of wiggle room at all. You'd want to sell the 12.5, but there's nothing to buy. That's the problem. On the call side, let's skip the call side. I don't want to take the call side. All right, Google earnings. Meta has earnings on the 25th. That'll be fun. Silver. Let's look at gold. No, gold was down today. Has it come back? Yeah, it's already come back. After the jobs report, it was down. Looks like it's come climbing back. Yes. I did get the bounce. Put side, is it too late to sell something on the put side? Might be. You sold the 162 and bought the 157. It's 56 minus 22 divided by 2 divided by 500. Missed the put side. Should have sold it yesterday. On the call side, sell the 177 and buy the 182. That's 88 minus 35. Yep. Divide that by 2 and divide that by 500. 5.3 if you want to take the call side. That's pretty good for gold. 177 on the chart. Right up about here. You get paid more because odds are, with this pullback, it should regain some ground here. I don't know if 177 is fair. I'd rather open the call side around. If it got up to 177, I'd open the call spread, but not right now. That's why you get paid more. Silver, Palantir, too small. Microsoft earnings are coming up. Bank of America earnings. Finally, bank earnings are starting soon. The XLU we've already looked at. 93% IV rank. ExxonMobil, we already looked at Exxon. Google, HYG. We didn't look at HYG yesterday. How's it looking today? I think it was doing better than the TLT. Slightly. What are we looking at? HYG? Corporates, huh? Look at all this open interest. Nice. Sorry. Let me scroll up. All this open interest. That's great. Lots of volume today. But Nothing good here. Nothing good on the put side. On the call side, nothing good here either. Nada. Next. HYG. Netflix. Earnings are on the 18th. That'll be fun to watch. The KRE. If you want to get some exposure to bank earnings, let's look at the KRE. Down again. Okie dokie. You want to sell something on the put side? Maybe. You'd have to go out to the 35. Sell the 35, buy the 33. Son of a gun. Well, if you got a small account, that'd be good. 46 minus 26, divide that by 2, divide that by 200. 5%. If you sold the 35 and bought the 33, you're risking $200 to get paid 5%. Where's 35 on the chart? All the way down here. But do remember that this is pricing in bank earnings, which are coming up. If you want to hold an ETF through bank earnings, it's not as volatile as the actual stocks themselves. But if there's any bad news like there was last March during their earnings season, it could be a doozy. Okay? Call side. Is it worth it? Sell the 45 and buy the 49. No, don't do that. Sell the 45 and buy the 48. 44 minus 14 divided by 2 divided by 300, 5% on the call side. So it's pretty fairly balanced on both sides. There's no premium or edge on the calls or the puts. So do with that as you want. I'm going to pass. Intel has earnings on the 26th. Coca-Cola has earnings on the 24th. Look at the volatility being priced into Coca-Cola. It's crazy. If you want to open a new position, we got, what's our spread? Coca-Cola, $250 spread. If you want to sell the 47.5 and buy the 45, I don't think you get the same as we did. 43 minus 21 divided by 2 divided by 250. Nope, you're only going to get 4.4%. If our trade closes, we're going to get, well, I think, what, 6%? You missed it on Coca-Cola. You're going to have to, like you said, it's already down $60, but we've got plenty of time. On the call side, skip the call side. So where you see Coca-Cola on this list at 96. Walmart, November 16th. That's awfully far out. WMT. Yep, earnings on the 16th, well over a month. Maybe there's something we do here with Walmart. Yowzer. Da-dun, da-dun, da-dun. Look at the put side on Walmart. If you sold the 140 and bought the 135, is it worth it? 124 minus 77, divide that by 2, divide that by 500, 4.7. Almost there. On the call side, hold on, if we sold the 140, bought the 130, 123 minus 48, divide that by 2, divide that by 1,000, only 3.7. Even if you spread this out, you're still not going to get paid. The call side, sell the 165 and buy the 170. 97 minus 38, divide that by 2, divide that by 500, almost 6% if you sell the call side. Now that's interesting. Where's 165 on the chart? All the way up here. Close to all-time highs. 165. That one's really interesting, you know? Even though it's had this big move down already, you're getting paid more on the call side. Just because it's had this move down, everyone's anticipating it rallying back up. So everyone's probably buying the calls and spiking the price. Tempting, right? Let's put Walmart on the list. Verizon, no way. Soxel. PayPal, we looked at PayPal yesterday. Disney has earnings about a month away. Square, we've got earnings on the 2nd. We've got a position open already on that one. The gold miner ETF. GDX. Let's take a look at GDX. Liquid, that's for sure. Nothing on the put side. Maybe the call side. You sold the 30. Bought the 32. Nah, no bueno. No good on that one. Costco. Costco's still on the list? COST. COST. They down big today? Yeah, they're down 4%. That's why. This is post earnings. Here's the chart. On the put side for Costco, you'd have to sell the 505 and buy the 500. And remember, there's no earnings on this expiration. 447 minus 387. Divide that by 2. Divide that by 500. 6% on the put side. Let's keep that in mind. On the call side, sell the 590 and buy the 595. 6% on that one. 279 minus 219. Divide that by 2. Divide that by 500. 6% on the call side. I'd rather do Walmart. What was the put side again? 505. Is it liquid? Kinda. Where's 505 on the chart? 505 is right about here. That's an interesting one. Got this long trend line here. Yeah, 505 seems fair. We'll keep it on the list. The XLF. Boeing has earnings on the 25th. Chevron, we didn't look at Chevron today. But earnings are on the 27th, that's why. XBI, SoFi, Ford, AT&T. Pfizer has earnings on the 31st. Target, we already looked at Target today. Earnings on the 15th. Pepsi, earnings on the 10th. The airlines earnings are coming up. The XLP. We didn't look at the XLP, did we? I don't think so. $63. On the put side of the XLP, he sold the 62. And bought the 60 or 59. Let's look at the 59. 47. minus 21. Divide that by 2, divide that by 300. 4.3 on the put side. On the call side, I would skip the call side. Put side looks interesting though. We're 62 on the chart. Right about here. If this sell-off continues, it can definitely get there. It's okay. Anything else? We're almost done for today. Almost done for the week. Kraft Heinz. Schwab. Bank earnings are coming up. Oxy. Let's look at Oxy next. Earnings are the 7th a month away. Let's look at the chain really quick. On the put side, if you sold the 52.5 and bought the 47.5, that's 54 minus 15 divided by 2 divided by 500. 4% on the put side. On the call side, sold the 67.5 and bought the 72.5. That's 59 minus 21. Divide that by 2. Divide that by 500. Skip this one. Not a lot here today. We're kind of in no man's land. We're waiting for earnings. Roblox, GM. Oracle. Post earnings, so that's good. Maybe we can get something on the put side. He sold the 97.5 and bought the 95. 80 minus 55 divided by 2 divided by 250. 5% there. On the call side, I would sell the 120, buy the 125. You're not going to get paid for it though. Where's 97.5 on the chart? What about here? I'd rather sell a call spread around 115. Why don't we roll Macy's together? Let's do that. Why don't we get some pen and paper ready? We'll write this one down. We'll do it together. So Macy's, first thing we gotta do is look at our cost basis. So we opened it at 76 cents. So 76, let's write down 76 is what we opened at. We're gonna cancel this, okay? So we're gonna cancel this order. We're gonna take this, we're gonna click on Macy's. We're gonna click on roll, okay? Remember 76, okay? That's important. We're gonna roll. So we're going to close the October 12 strike put, and we're gonna sell the same strike in November. Let's go for the mid. We're gonna make sure you receive a credit when rolling. Never pay to roll. That's very important. Let's just go with the market so we can get this one filled, okay? 21. Everything looks good. So you're going to receive a credit on that. So we'll receive 21. We'll preview that. So buy 1 October 12 to close. And we'll sell 1 12 November to open. We'll send that out. And it's gotten filled. Okay. It's filled at 144. Write that number down. gonna go over here to count and orders today. Macy's 22. So 122. Okay. So we're going to set our new closing order. So we had it opened at 76. So 122 minus 76. We took a $46 loss. Remember that, $46 loss when we rolled it, because we closed the one for a loss at $46 loss. Now we open at 144. So to figure out what we're going to set our good till canceled closing order on this one, we got filled at 144. So take a 144 minus 46, so that takes us to 98. 46 was the loss, so it's as if we were opening a new position at 98. Okay, take 98 now, divide 98 by 2, that's 49. We want to set this at 49 cents. Okay, so buy 1 of November now, the 12 put limit, good till canceled at 49 cents. We'll preview that. Buy 1 to close, send. And now it'll hang out here, and it's join the rest of these with November expiration. Okay, that's 42 days away. This is going to include earnings, so Macy's earnings are in a month or so. All right, so that's a roll. Rolling is fun. Rolling is easy. It buys you more time, and it also reduces your cost basis. Okay. If you want to go over the math again, rewatch this video, because rolling is an important part of trading options. You know, sometimes these positions like Coca-Cola or Macy's goes against us. You don't have to close a position. You can always roll and get more time on your side. It gives you more time for things to play out. Okay? Who knows? Maybe we'll have to roll Coca-Cola. Okay? But like I said, these are all November positions. We've got 42 days till expiration November. So we got plenty of time for all these to play out. You know, something may be at a loss today, but like in a week or two, it may be in our favor. Okay? And if not, we can always roll. But good, I'm glad we were able to roll that together. If you were in this Macy's position with us since, when did we open it? September at some point? I think sometime early mid-September we opened this. So we've rolled it together. Now you know how to do it. All right? We got something accomplished today. There you go. Happy Friday, everybody. Thanks for watching, and if you want to watch, tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. If you haven't already subscribed, you can get alerts on when we're going to go live every day, but it's every day at market, about 45 minutes after the market open. Also, tell your friends to watch too. We can trade options together. We can all learn together, and subscribe. Tell your friends to subscribe too. All right? Thanks so much for watching. We'll see you on Monday.